I'll be talking this morning about financing investment properties. And I don't want to really sell anything, as I mentioned in a couple of my posts on LinkedIn and Alignable. So I'm not really here to sell a program, but I do kind of want to explain what I can do. I did recently meet uh, a private lender in the Bay Area, and he has offered to help with gap funding, which to it's mezzanine financing as some of the bigger players know it as. But he said that he could help out with earnest money deposits and any down payment assistance as long as the project makes sense. He goes nationwide. Uh, so these are just some of the things he mentioned. He has about 1.5 million to invest, and he does have other partners that pool the money with him. There is no restrictions that I know of as long as it's commercial real estate. It could be for office, multifamily, light industrial. Again, it's nationwide. He's, Alaska, Hawaii, North Dakota, South Dakota, all these other areas that nobody else seems to like or other lenders won't go there. He will go there. Basically, his structure is a joint venture program. And I'll get into that here in just a minute. But before I dive into that, let me talk about some other things here real quick. So once again, we're talking about multifamily or residential investments for the most part. I mean, I can do office buildings and other asset types in the commercial real estate space. It's just that I have to dig a little bit deeper and harder to find the lenders. Most lenders, as you know, are doing multifamily or residential investment financing. So that's where a majority of the capital is flowing these days. However, that's not to say that we won't take a look at anything else. I'm always game for anything. So that being said, let's continue. I want to just start with the wholesale fix and flip. I'm going to keep this webinar really short today because that's where a lot of our investors are into wholesale fix and flip. However, again, I can't emphasize this enough. If you have an office building or light industrial, retail, hotel, any of these other asset types, please feel free to contact me. I would be more than happy to help you out. If I can't personally do it, I can find somebody that can. Okay. So that's the main thing, is that we get the deal done. But anyway, back to the wholesale fix and flip. I'm connected to over 30 wholesale fix and flip lenders. There are quite a number of them out there. They're all very good, very outstanding. There's a whole lot of capital for these type of deals. And lenders are competing. The competition is pretty good among the wholesale and fix and flip lenders to try to get your business. So it's competitive. Most will lend up to 70% loan to cost, or do up to 100% of the after repair value. So once again, we look at the documents and see what the current value is, how much is for repairs, needed for repairs or improvements, and then calculate it after repair value. These documents, when you submit them, will have to come from a real estate professional, either an appraiser or experienced real estate agent or broker that knows what they're doing. You can't just say, hey, I think the ARV, the after repair value on this property is going to be, 320,000, and I'm picking it up for 150,000, right? Unfortunately, fortunately and unfortunately, we have to prove the values. Okay, so for the most part, most of the lenders, not all of them, but most of them, a large majority, require you to have at least a 680 FICO score. And that goes for all other types of real estate loans and applications and asset classes. So if you want to buy, for example, an office building in, downtown Dallas, Texas, you'll still probably need a 680. 680 seems to be the fine line between, yes, we'll fund you versus no, we're not going to take a look at this. So that's just kind of an average round number. Once again, it's not set in stone. It can vary. Just all depends. Okay, then most of the lenders want to see at least 3 properties that you've done in the past 24 months if you want to get a lower interest rate. So the more experience you have, the lower the rate will be. That doesn't mean that if you have no experience, you've never done this before, you're just now getting into it, that they won't necessarily turn you away. But the only problem is that you're going to have a higher interest rate because, obviously they want to mitigate their risks, and you coming in with no experience, you're going to be a higher risk to them. So obviously they're going to want to charge you a higher interest rate for that. But once again, if you find a really good deal, if there truly is value add and you're a strong believer and you can show it and prove it, well then, the interest rate really doesn't matter because you're going to turn around and probably, sell it to another investor anyway, right? So you're going to get retail, your after repair value, which will leave money in your pocket. So I guess the point is don't be greedy. Don't be greedy about interest rates being high, and don't be greedy about leaving some money, some equity for the end buyer of your fix and flip unit. Okay, so when we submit a document, obviously we're going to have title reports, purchase and sales agreement, deed of trust, some other legal documents, bank statements. I'm also talking about past properties here. I see that in parentheses. So this is to show your experience. Okay, so you can't just say, yeah, I did 3, I fixed and flipped 3 properties in Oklahoma City, Oklahoma here in the past, 18 months, right? Once again, you got to show it, or you got to prove it. You got to prove it, right? They're just not going to take your word for it. So always have proof. And so here are some of the things that you're going to need to prove and show that you are experienced. Once again, the title property of the property that you've fixed and flipped or wholesaled. You're going to have to show the purchase agreement or maybe the title report, something that shows your name on it. If you use a contractor to help you with the rehab work, you'll need their name and contact information, copy of their license, also their E&O insurance, entity documents. If they're an LLC or a C corporation, you're going to need probably have to, well, you may not have to go that far, but it's better to be over prepared than under prepared, right? And you may not have to submit all those documents, but I would suggest that if you're going to take this seriously, if you're going to take wholesaling seriously, that you have all of this lined up anyway, because some lenders may be very lenient on their qualifications, close to no docs or little docs documents needed. And there's some lenders that, they may provide really good interest rates, competitive, and be super competitive, but they're going to want to see everything on you. I mean, they're going to want to see your personal financial statements, your bank statements, your experience, and then all these other documents. If you claim to have done 3 properties in the past, they're going to want to see all that. They want visual proof, pictures of the property, pictures, before and after pictures, and they want to see that your name was associated with the property. So probably a title report or a purchase and sales agreement, as I just mentioned. Anything to show that you were involved in this deal or these deals, as the case might be. All right. So I'm just giving this to you. I know this is a little excessive, and yeah, it seems like overkill. But again, I just want to put it out there that it's probably better just to have too much than too little, especially when it comes to loan, obtaining financing and getting a loan for your property. And in the wholesale world, we know that properties move really fast. And once you lock them up, you got to get them fixed and flipped really quick. You got to get them back out there in the market ASAP, because you don't want to get bitten by the holding costs, and especially burn. That's even more important, right? Okay, so enough on that. I think most of you get that. I don't need to elaborate with that. Okay, I just want to spend a couple minutes talking about this JV partner. He's an Indian man from India, and he told me that he has $1.5 million that he can use to help people uh, basically with their earnest money deposits. That's the EMD, closing costs if needed. What else? Just your down payment assistance and so on. He does state that he wants to basically create a joint venture, and the deals have to make sense to him. Okay. Now, uh, what that all entails, he's the one lending the money. So we would have to take the deal to him and ask him for help. But I can tell you as a loan originator and a processor underwriter, it's going to have to be a pretty good deal. You're going to have your documents together. It's going to have to be really strong. You know, there's going to have to be some profit in there for you as well as for the lender. And they're going to make sure that you have reserves that you can, or that the property can pay itself back. So this is all part of the underwriting process that I go through, and then if it's good, then I take it to him and for the other funding for your down payment or earnest money, whatever it is you need. Okay, so there's no, um, I do have a couple programs where I charge a fee, but that's kind of sort of like a little membership type deal where I kind of teach you and hold your hand and help you learn to underwrite your deals and stuff. But I'm not gonna go into that today. You can find out more information on my website. But if you need help with the down payment, just contact me. Simply contact me, and let's see if we can make your deal work. Okay. There's no upfront fees or anything like that. But that being said, yeah, there will be some money involved. I don't work for free. I'm sorry, if that hurts your feelings. I'm not going to work for peanuts either. I'm not going to gouge you. It'll be fair. For the most part, I charge 2 points for all deals under $200,000, and basically 1 point above it on deals anything above $200,000. Okay, so that's just kind of depending on the case. If you have a really, really tough case, then it might be more. If it's a real easy one, quick and easy, maybe less. We'll see. We'll also have to see how we can work it out with my JV partner. Okay, and see how that works. But okay. So anyway, enough on that. Let's continue on. Okay, so this basically wraps up the uh, the webinar here for this morning. My contact information, as you can see, is on the screen. So we will, you can feel free to reach out to me. If you contact me by mobile, if you call my cell phone, please leave a message. You probably get a bunch of spam and robocalls and calls that you don't want from all kinds of salespeople and politicians. And, I'm sorry, folks, but I just don't waste my time with that. So if you are serious, then I ask that you please leave a message. Let me know your name, where you're at, and that you have something you want me to look at. Just, so it's really quick. I take it you have a voice, you have a mouth, you can speak. So you call me, say, Andrew, this is, Tony Smith. I've got a fix and flip, in Oklahoma City, Oklahoma. And, it's, I can get it for 100,000 and I can turn around and sell it for 250. I need about, 180,000 for rehab and whatnot. And, just kind of let me know a little bit and just leave a name and phone number and even just say, yeah, I have a deal. That's all you need to say. And then I'll call you back as soon as I get a chance. All right. I also would like to encourage you to take a look at my YouTube channel, which is up there on the screen. It's just basically, if you type in the YouTube browser, 2 Acres Investing, it'll take you directly to my channel. I have a whole bunch of 3 to 5 minute clips on basically just stuff about real estate, like what to look for in an appraisal and the importance of having a team. I have a little blurb on interest rates. And, oh, speaking of interest rates, I do want to say something here really quick. I think that's one of the number one deal killers, not just for loan officers and people like me who are trying to originate loans for a living, but also for investors too. So just a real quick little plug on that. Investors, obviously, we all want the lowest interest rate. I get that. I totally get that. However, I have seen investors walk away from absolutely great deals because they couldn't get the interest rate that they wanted. And that, you got to understand that when a lender puts out an interest rate, if they're promoting, say, let's just say for the sake of argument that they're on their ads or whatever, you see that they're offering loans, $500,000 to $10 million at 7% interest. Okay. That 7% interest, look at that as a teaser rate. That's just to get you to click on their ad or get you to respond to them. Of course, once you get involved, once you start showing your cards and submitting your documents, then they'll say, oh, well, because your credit score is, 680, the 7% is reserved for our borrowers that have like 780 or better FICO scores, right? Or they have, they can put down, 40%. It's a 60% LTV or something like that, right? So obviously, the stronger you are on paper and in equity and assets and cash, then the better rate and terms you're going to get. You can find a property, even if you do get a 10% rate on that property, let's try to see if it will cover the debt. The debt coverage service ratio is the most important key metric for lenders. They want to know that if you buy this property, that it will service the debt, that they're going to get their money back with the interest rate that they're charging. Well, it's a challenge to find those properties. Most of them will not service the debt. I use a 50% expense ratio. So whatever the gross income is, I cut it right in half, and that's your expenses. That pays your insurance, your taxes, maintenance, reserve for maintenance, property management. All those fees are included. So that's a really quick way. And I'm gonna make another webinar on that, on how to evaluate properties in 5 minutes or less. But the formula is really simple. You take their asking price, and then you try to get their gross income or calculate it based on market rents. And then you use that and then cut that in half, the gross income, rental income in half. And then that's the 50% is your expenses. And then whatever's left over, then you have to calculate, use a financial calculator and plug in, say, 10% interest for 30 years at, $500,000 loan amount, and then you can see how much your monthly payments is going to be. So if your monthly payment is, say, I don't know, on a $500,000 property, let's say that it's $4,500 a month, right? And you're looking at a 6-plex, and it cash flows, let's say bottom line net actual net income, or your take home money is $30,000. Are you going to be able to buy that property? Well, let's think about it. $4,500 a month times 12 is, well, I know if I round it down to 4,000 and I multiply that by 12, that's 48,000 a year, plus $500 a month times 12, that's another 6,000. So 6 plus 48 is what? 54. So we're looking at $54,000 a year to make the payments, principal and interest, on a rate and term loan. But remember, we said that our actual net income is $30,000. So that tells you right off the bat that you can't afford this property. It's not going to work. The only way you could do that is to ask the seller to come way down on the price. Number two, hope and pray to God that the appraisal comes in low. so that the seller, have the appraiser, put the seller on the spot, or do seller financing. That's an option too. I mean, if you really like the property, if you think you can make it work, ask the seller to carry it. But just also keep in mind that if a seller carries, the lenders are not going to like that. They don't want anybody being in a second. I mean, they will be in first lien position, but a second lien holder, especially if it's the owner, still has a little bit of control and say in the whole thing. And most lenders don't like it. They will not allow for it. So just keep that in mind. You could come in with a higher down payment to lower that LTV. There's some options. Or one way, another thing too, real quickly, is the bridge loan. I can't say enough about bridge loans. Now, bridge loans are averaging right now around between 12 and 14%. Super steep, but just please keep in mind a couple things. First of all, this is interest only. It's not principal. Okay, yeah, I get it. You're not building equity. But the thing is, you can lock that property in really, really quick. Just lock it down, get it in your name, get the title, put it in your LLC, and after a year, you can refinance it into a rate and term loan. And hopefully interest rates will go down here. Hopefully next year. I don't see anything happening in 2023, but I hope I hope I'm wrong. I hope interest rates do come down. But the most important thing here, folks, is that don't let a good deal slip away just because you're afraid of the interest rates. Okay, don't let that scare you away. On the flip side, though, yes, I understand there is talks about the market collapsing. There's going to be a lot of properties coming down the road later this year that are going to be available at a discount or a reduced price. Hopefully, I mean, I don't wish that on any current owner of real estate, but for those of us who are wanting to get into investing, it might be suitable and favorable to sit on the sidelines and wait for those deals. In the meantime, improve your credit. Contact me and let me know if you need to improve your credit or want to. I've got Ivory Becker with Insight Strategies. She's absolutely phenomenal. I refer everybody to her. So this would be a good time to rebuild, or maybe not rebuild, but improve your credit scores if you have any marks on your credit. Time to save up money for your down payment. And of course, the list goes on and on. So there's a lot of things you can do while you're waiting for the values to come down. Just be active, stay in the game, keep learning, keep looking, contact me. I'm always happy to help out. Right now, I can take on a few more people. I can't, I don't know how soon that will change, but I may get to the point where I'm super, super busy and I won't be able to help you that much. So feel free to reach out to me. And another thing real quick there. So anyway, I don't really have much more to say other than, thank you so much for joining. And, I wish you all the best. Please, again, feel free to contact me. A really good conversation, and we may have some chemistry. I don't know. Maybe not. But regardless, nothing ventured, nothing gained. So again, I invite you to contact me. All right, my friend. I'm going to shut up and get off this call, let you get back to your life. I just want to take a moment to thank you so much again for taking time out of your busy life and schedule to join me on this call. I hope it's been very beneficial for you. And again, I just, wish you all the best.